Hello viewers and welcome back to the Stop Hunter. Now recently I posted this video, I'll put a link to that at the end of this one, which basically went through the top 10 reasons why new traders, or any trader for that matter, actually fail, all doing the same fatal mistakes. Now number 10 was not back testing properly, and that's what this video is all about. Now a lot of new traders will then come to me and say, well, I don't have the maths or the computer skills to do it, so I'm just going to put some money into it and see what happens. Well, guess what? You're going to be one of those bad failing statistics. There's no excuses. Anyone can backtest. So I went away and came up with 14 different ways, ideas that you can backtest without having to be an Einstein of mathematics or a computer PhD scientist. You don't need to be at that level to validate, the potential success of your strategy. Ideally, and I made that investment in myself, you would have, a certain level of computer knowledge, programming knowledge, and mathematics behind you, but you don't need that to get going. So, like I said, I've got 14 approaches that you can follow, and we're going to go through those now. So let's get stuck into them. Let's start by going back to basics. Now, question for you. How do you think when I first started, before the age of all this technology, and computer science, all these tools that you've got now, how do you think the old world of trading used to do it? Well, from a bit of experience and manual back testing using the paper and pen, and you can do that as well. Yes, it's simple. Yes, it is time consuming, but it's going to help you develop a better feel for the market while you test your rules. So how can you do that? Well, you could manually go over historical charts and record how your strategy would have performed just using a simple notepad or spreadsheet. Take 6 months maybe, apply your strategy rules, buy when prices cross above a moving average, for example, note down entry price, stop loss, take profit, and the outcome of the trade, win loss. Tally up the results and see if the strategy is profitable. It's as simple as that. At least you've started the back testing process from the absolute basics, and you've got some data to work with. So number 2, well, you could use free charting platforms or paid charting platforms for that matter. A good example of that, TradingView, very popular at the moment. If you want to find out more about them, I've got a link for them in the description below this video. But how could you do that? They've got something called replay mode. It's a free feature within whatever package you have there, and you can move the chart back in time and step forward one candle at a time. So you're not tricking yourself, fooling yourself in your results. You're seeing how your strategy would pan out almost in real time. That's the replay mode. You take that period of time and you move forward, and as you move forward you can make notes of where you would buy, sell, what worked, what didn't, record those results again in a spreadsheet, calculate your win rate, profitability, those essential statistics. And you can also not just look at the price action, you can add on indicators like your moving averages, RSI, MACD, and give yourself a visual back test by noting where the signals line up with your strategy. Again, no real brain power required for our second selection method here. It is really simple. It's very visual. Just getting familiar with a charting platform of your choice. I use TradingView as well. It's very good, very simple, but most charting packages are going to have these type of features now if they're worth their salt. Number 3, using Excel or Google Sheets for tracking. I said you don't need any coding or maths ability, but really everyone uses Excel and Google now. There's no excuses. Again, it really is basic Excel and Google stuff. It's nothing mind-blowing. You can easily build a basic spreadsheet to track your trades manually, even without any programming knowledge. And most of your brokers as well have a nice little download button, often into a CSV format, where you can then just download that data into a spreadsheet and then just play around with it. People are helping you at every step of the way. You just got to do a bit of background work to get yourself started. And then record all the data, the entries, exit prices, profit, losses, etc., and use really basic maths functions in Excel to calculate the performance of your strategy, like win, loss, risk reward ratios, that sort of thing. Templates, ideas, well, there's plenty of free or pre-made trading journals out there online or in club societies, that sort of thing, designed for non-coders already, which you can copy and modify for your own use. Why not, like number 4 says here, use a trading simulator. So that allows you to test your strategies in real time, but using historical data. Even ChatGPT and variants of that can allow you to do that these days. But there's software out there, websites out there that let you build strategies, using their data, real-time data, but again taking away all the risks. Have a look at websites like Investopedia, Thinkorswim, MetaTrader. MetaTrader is good. MT4, MT5 got a great backtesting bit of kit. Doesn't take too much to work out how to use it as well. Gives you all the stats you need. Like I said, there's often free demo accounts or simulators out there where you can practice your trades and see how your strategy performs without ever having to learn any real programming skills whatsoever. A more subtle idea here now, backtesting via YouTube or forums. How could you do this? Well, many experienced traders out there are sharing their strategies and backtesting processes on YouTube or forums. There probably is a lot of rubbish out there, but there is some good stuff as well. Don't just take their word for it. If your ideas and their ideas line up, see what they've been doing, learn from them, take that into your own world of trading. We've sort of already touched on this in previous examples, and a lot of them do sort of overlap anyway, but we're just focusing in on more specifics here. Number 6, using free backtesting tools that no coding is required. There's a lot of platforms out there allow you to backtest without knowing coding. TradingView, another typical example there, offers a backtesting feature. They've got something called PineScript. If you want to learn that, is quite straightforward, but there is a strategy function there that is very easy to use. Other ones like Quant Connect, which is a platform with free tutorials on how to test simple strategies with drag and drop tools, or something like Stock Charts. Got basic backtesting tools with technical indicators, but that example, as it says there, a bit more limited. Why not try using third-party backtesting software here at number 7? How could you do that? Well, many third-party tools out there, built for helping you backtest visually or with minimal coding knowledge. For example, Edgewonk, TraderView allow you to log your trades and analyze them. They focus on journaling but give insights into the effectiveness of your strategy over time. Another one, AmiBroker, bit more technical maybe, but it has a simple to use GUI for running some basic backtests. Have you ever thought of collaborating with experienced traders? Number 8, how could you? Well, if you're part of a trading community, forum or group, reach out to someone with programming skills which could maybe help backtest your idea. Pull your ideas, share your knowledge, experience. You might be fantastic at using technical analysis, but you want a mate who can code. Get together, work together, team up, see what you can do. Also, a lot of traders, experienced ones, are open to collaborating or testing ideas, especially if you're in an active trading community. And I've got to drop a big hint there. You know, we run our own traders club at TheStopHunter. I'll put a video to that at the end of this one if you want to find out more. But it's got a Facebook community in there with other traders, myself in there, direct access to me. Join in, put your ideas out into that sort of forum. Now, number 9, forward testing in a demo account. I really like this one. I also got a twist on that. Well, you can actually do it in a live account, and I would call that experimental trading. Why do I say go for live rather than demo? Well, because you're going to learn a lot more, a lot quicker. When you're on real money, you do learn a lot faster. But I always say, if you're going to do this approach, don't go, full size risk. Take it down to 10% of the trade size that you were going to do, even smaller. Take, as minimal risk as you can take, and then track the trades for, say, a period of 3 months or so. Build yourself up that database of knowledge, the trades, and then maybe scale up after you're comfortable you've done your analysis on the 3 months. But at least you're earning as well. You could sit there for 3 months, 6 months on a demo account. It all works just as you expected, and you've made no money. So put some risk there, but like I said, you will learn a lot quicker that way. So a bit like number 9, number 10, journaling trades and analysing later. You're just keeping a log of every trade you make with your discretionary strategy, whether it's live or in demo. And again, it's recording the basics, the entry points, the exit points, the reasons, your emotions, how you're feeling at the time. Are you ill? Are you suffering a hangover? What affected your results? Lifestyle, that sort of thing. Build up a detailed log journal. And after a week, a month, or whatever period you define in your trading plan, what common problems did you face? What worked? What didn't? All those things that you can then see by looking back at the data that you've kept. Journaling, a very key tool for improving your strategy through reflection and refinement. Similar to number 8, collaborating with experienced traders. There's also the wider, more generic sort of groups you could go into, trading communities, things like Discord or Reddit, and a lot of people in there share their backtesting resources, or even sometimes backtesting tools that don't require programming knowledge. Once you get familiar with the groups and start talking to people, share your own tools, ideas, thoughts. Can be very profitable to do that. Find others who've already backtested ideas and strategies similar to yours, and adapt their approach. I know you'll want to keep your stuff secret because you think you've got the holy grail, but sometimes it's good to talk. So we previously talked about the walkthrough replay tool on TradingView, and it's a similar type of idea. Trade walkthroughs on historical charts, more to, I suppose, give you the experience, the feel of backtesting, looking at data, looking at charts, pulling off ideas, entry, exit points, trade management, that sort of thing. It's a practice type of environment that you're setting up for yourself. Print yourself off a historical chart, take screenshots, walk through them by marking where you would enter or exit trades. Review this as well. No point just doing it for fun. You've got to learn from it as well and see how your strategy would have played out. So 13 is more of a paid type of option. Backtesting services, brokers, trading educators, they can often offer backtesting as a service. You provide them with the rules, of the strategy, the idea, and they run the backtest for you on historical data. Caveat there is, this is probably going to be costly, and if you've got a small trading account, is it really worth it? I think there's probably, many other ways you can get good at backtesting without offloading a lot of your own cash on this sort of tool, but definitely worth checking out, because they've got the skills, technical knowledge, stuff that you don't have. So my final idea for you, number 14, using a mentor or trading coach. If you know an experienced trader, hint hint, you could ask them to help you validate your trading idea. Like I said, we've got the Traders Club, the Facebook group, where you can ask me that sort of question. They can help you with backtesting themselves or point you towards the right tools to use. Right, so there you go. You've got no excuse now. Don't become another one of the statistics. Get backtesting done. It really is a crucial part of your trading and often ignored. You know, you just go straight in, head first, lose all your money, and you wonder why. There's lots of moving parts to becoming a successful trader. Backtesting, well, that is one of them. And I suggest if you can't follow any of these processes in this video, then please, you know, give up the idea of becoming a trader, save your money, and, you know, do something else. You know, it'll be a lot more enjoyable to you in the longer run. Now, if you've liked today's video, please give us the thumbs up. Don't forget to subscribe and hit the bell notification buttons to receive future content heads up around this sort of stuff on the channel. And also mentioned a few videos worth your watching, and those are coming up right now.